The first trading day of the year started off with a big red candle. Is this selling going to continue? Or are we going to start seeing those buy the dippers come in and just jam this market even higher? Well, in today's video, we're going to be talking about what we need to watch out for. I got a lot of charts to go over, okay? We're going to go over indices, indicators, commodities, bonds, yields, just to get a good idea as to where the market might be headed next. If you're new here, I do these videos Monday through Friday, 5 days a week. Let's go ahead and get into today's show. All right, welcome back. First, let me start this whole show off here showing a post-election year seasonality chart. I want to show you we're right here in January. Typically, you see a pullback in the beginning of the year. The blue is the post-election. The pink is the average year. And then notice how towards the mid-January, you get a ramp up, and then you get a pretty significant pull down here in February. So the first couple of months of the year are pretty volatile, to say the least. But let's look at some long-term charts to really understand what to look for, what I'm looking at for potential buying opportunities. So first, we're going to be looking at monthly timeframes. I'm going to go through these very quick because I'm only pointing out just key things on these monthly timeframes, and that is the disconnect from the 5-period EMA. Notice here on the S&P 500, we are still, if we were to reconnect back with the 5 EMA, we can fall 3.2%. In the industrials, we can fall 3.3%. In the Dow Jones Global Index, I forgot to write the percentage there, but you can see where we closed today was 492, and the 5 EMA is at 468. So we have quite a bit of points to fall to reconnect to the 5 EMA. And notice the 5 EMA is right by this previous breakout area. We're kind of getting overthrown, overshot this resistance. Now, that would make sense for a pullback and buying that area of support. Now, another thing, Russell 2000, we would fall 7.4% from this current standings where we're at 193.50. So we can fall 7.4 more percent in order to reconnect to the most frequently tagged EMA. Not to say that that's going to happen, but this is the stuff that I'm looking for because the 5 EMA has been acting as a really significant area of support for these indices. NDX, we can fall 4.2% to reconnect. NYSE, okay? 3.36% we can fall to reconnect and find that area of support. So that's kind of just a clear picture as to what I'm looking for on the longer term time frames. If we start getting more aggressive selling taking place, start looking at these monthly 5 EMAs for potential reconnects at. And now today I'm going to be showing you also some very clear observations as to where the market kind of went to today on this pullback and then where we ended, because it's very similar across all the indices here. So we'll start with the S&P 500. First thing I want to call out, still, Bollinger Bands are very contracted. This whole Santa Claus rally got wiped out in the very first trading day of 2021. Okay, you can see right here this big red engulfing candle wiped out 4 or 5 days of data, and we came even lower than that. But notice this, where did we tag today? Well, not only this area of support right here, here, and then resistance, but the lower Bollinger Band. Then where did we finish? Well, we closed back up right by the 20-period moving average. Notice this volume has been sloping down. We've been saying this drift higher hasn't really been supported by on-balance volume. And we've been saying, guess what? These tight Bollinger Bands are foreshadowing increased volatility. We saw some of that today, but we still have more volatility to come. The Bollinger Bands are still very tightly contracted. On the 30-minute time frame, I just want to point out we broke down through this channel. We hit our target not once, but twice, and we're now forming somewhat of a bear flag. Are we going to get continued breakdown to this? Maybe, but notice we have to break down through this level, and then this gap right here. So we need to make a new low in order to change the trend, because we've been making higher highs and higher lows here. So the trend is still bullish, my friend. The trend is your friend until the end, so they say. Dow Jones on the weekly time frame. Look at this, was a big week the previous week and how we closed it off. And what happened today? Well, we pretty much wiped out the entire week in a single day. All right, so pretty aggressive move. We had a rising wedge here. We broke down. We had a rising wedge here. We actually punctured it today, but we closed back within it. Okay, so let's zoom in a little bit more. You can see here, this can be drawn out a couple of ways. So we technically came down. Where did we tag? Okay, this is just like the S&P 500. We tagged the lower Bollinger Band, and then we closed right back by the 20-period moving average. It's like algos at work here, right? On balance volume down ticked a little bit. It's been sloping down and this has been drifting higher. Bollinger Bands are still tightly contracted, which foreshadows potential more increased volatility. If the selling continues, start to look for closes below the 20-period moving average, and then if we break below this low, okay, of the candle today, which was 29,881. If we start breaking below that, that could be the point where we get that Bollinger Band expansion and we get some more of a pullback into these areas of potential support. But we'll get there, okay? That's when we want to look at the monthly time frames. 30-minute time frame, what took place? Well, we started seeing that move up, right? But then guess what happened? We saw that big rip down today, forming somewhat of a bear flag. Now, we're still within this channel. We still have a higher low relative to right here, and we have higher highs right here. So it's a bullish trend still, okay? Nothing changes, but it was some pretty aggressive selling, which could be a lot of things, okay? We have a lot of news coming up in the next couple of days. I'm not going to get really into that. And then on top of that, we have the, potential selling taking place for rolling over the taxes into the following year. So there's a lot of things that can be taking place here while we're seeing this volatility. Russell 2000. Okay, I'm going to be looking at the bigger picture here, weekly time frame, okay, zoomed way out. Notice the MFI down here, overbought. We fell 9%, we fell 5%. We're overbought significantly over here, and we're starting to see a pullback, okay? If I zoom in, we're in this bull channel. All right, with an MFI overbought. So what can happen? Well, imagine this weekly time frame pulling down and tagging the 20-period weekly moving average. That's right here at this specific trend line too. So there can be some really, big buyers stepping up right here. And then when we looked at the monthly 5 EMA, let me actually bring that back up. The monthly 5 EMA on the IWM was right here. The monthly 5 EMA would put us right around, where was it? 178. So when I go back into the IWM, this was unplanned, 178 would be right here, basically just right above the 20-period moving average in the lower portion. Do you see what I'm saying here? Why it's important to look at these multiple time frames now. The daily time frame, we broke through this falling wedge. Guess what? We didn't tag the lower Bollinger Band, but look where we closed. On the 20-period moving average. It's just like, all the indices are just perfectly lined up for, whatever's being planned to happen next here. MACD, though, is spreading right here. As you can see, RSI is still above 50, kind of dying down. And another note on the MACD, yes, it's picking up bearish momentum, but it's still above zero, okay? So don't lose your mind over this. However, on the 2-hour time frame, what did we say with this a few, like a week ago, 2 weeks ago? We said, if this breaks down all the way down, we're going to look back at this and look at this as the most obvious pattern in history. And I said that because it really was just a perfectly tightly coiled rising wedge. And we broke down from it, then we kind of rallied back up, we fell down, and now what do you see forming? Okay, this was called out, a little left shoulder, head, right shoulder, and then we still have to break through the neckline, which is this gray box, which happens to also be a gap that would have to get filled. Now, today we did make a lower low than this previous, but as you can see, we saw strength come in and bounce from those levels. We need more data. We need to close below this neckline to see if this fall is going to continue. Now let's go to the Nasdaq 100, okay? Also, well, I don't have the Bollinger Bands up, unfortunately. I don't think it tagged the lower Bollinger Band, but it may have. And then we kind of bounced right back up. We did close below the 5 EMA, and we broke through this kind of rising wedge pattern. You can see the symmetrical triangle right here on the money flow. Okay, we've been tracking it, and when we broke out, it wasn't really supported here. So a pullback would make sense in the NDX, but look for areas of support to potentially buy into. That would make a lot of sense to me because this has been a very strong performer. But like I said, we're going to be getting into the big players, and the big players can really move these indices higher. And it's the FAANG man stocks. I'm going to go quickly through those two as well. Before I do, NYSE, what took place today? Big gap up, and then we crushed down to the downside. Very bearish looking type candle. We tagged the lower Bollinger Band. We closed below the 5 EMA, and we're sitting right on the 20-period moving average. MACD also sloping down. It's just crazy how this is all just acting so, incoordinate. Oh my gosh, what word am I trying to say? Oh my gosh, I can't say these words. Incoordinates. Oh my gosh, I can't say the word. Okay. It just amazes me how much these are all acting the same. There's the extent of my vocabulary. Nice. Okay, so also, what to notice here? Just notice how big of an engulfing candle, bearish engulfing candle this is comparatively to the last week or so of trading. So we need to see one follow through to the downside. The Bollinger Bands also very tightly contracted, which foreshadows more volatility to come. All right, that was a mouthful. Now let's quickly go through the big players. These ones I'm going to go quickly through because I just mapped out patterns that we need to watch out for on these FAANG stocks. This is in no particular order. First off, NVIDIA, ascending triangle. Price percent oscillator sloping down. We need to break above resistance if we want to see the market continue. This is in the semiconductor. Semiconductors make up a big portion of the Nasdaq. Facebook, symmetrical triangle. Okay, support is holding, but be careful if we start breaking down. PPO sloping down as well. Okay, Apple, ascending triangle. Look at this. Kind of looks like it might be ticking up. That's a bullish crossover. Maybe we might start catching bids and breaking above this resistance. I'll tell you, if the market wants to continue to move, it's going to need the big players' participation. Amazon, symmetrical triangle. And by the way, these are all on the weekly time frames. Okay, so this is bigger picture stuff. Okay, symmetrical triangle. Price percent oscillator sloping down. If support holds, great. We need to break above this in order to see the market continue to move too. Amazon's a huge player. Google, flagging, consolidating, whatever you want to call it. However, watch the PPO cross. That's a bearish cross, still above zero though. We need to break through this support in order to validate this. And if we broke through this support, we can see further downwards momentum. This could potentially be a left shoulder and a head and then a right shoulder. Yet we don't know yet. That's more of a prediction of sorts or whatever. Potential forecast. Microsoft, symmetrical triangle as well. Resistance is holding, support is holding, price percent oscillator sloping down. Okay, we need these things to break out to the upside in order for the markets to continue to head forward. If we start seeing these break down from their patterns, it's not going to be a good thing for the indices. Netflix, flagging out, not looking too bad, but keep in mind resistance is holding, not the greatest start to the week, and this looked like it was about to cross over and then slightly got rejected, so we're going to keep a close eye on Netflix as well. The only strong performer out of all of these is Tesla. Tesla broke out of this resistance, flew higher, symmetrical triangle, flew higher, and now, we're just kind of sitting up here. Where did we close today? 729, so it's just been a monster move. Keep an eye on it. Obviously, you can tell right here on the PPO, a little bit of a negative divergence. All right. Now it's time to get into some indicators. I wanted this video to be somewhat short, but there's so much data to go over. All right, indicators. This is the VIX. Checking in on, the fear index. What's going on? Obviously, huge pickup in volatility. Up 4.22. That's 18.55%. You can just see the big green candle there. Look we broke out of this wedge. We started drifting down. And then we said if we start getting above 25, expect to see more volatility. We're seeing that more volatility take place. Bollinger Bands are still tightly contracted. If we start getting above 30, be very careful there. Why 30? Well, first off, we created some resistance there. We had some resistance there. And then look right here. We have resistance, okay? So if the Bollinger Bands start expanding by breaking out of this area, 30, we can see some more downwards pressure on the markets. It would make sense. Here's the sell signal. Sell signal started sloping back up again. Okay, the CPC, the purple shaded line in the back had this little uptick today. So yeah, we're seeing this move up, but we still haven't crossed above 8.0 or 0.8. Okay, once we cross above 0.8, that's the sell signal. Overall, big context picture. The CPCE, this is the put to call ratio for equities. Look, we're still really bullish here. Okay, this is the monthly time frame. 0.47. That's like extreme bullish sentiment right here. All right, and sometimes when it's extreme bullish, you kind of want to look more towards the bearish play, but right now it's all bullish. BP NDX and both the BP SPX, you can see negative divergence as it started moving higher. And you saw this kind of pull back today, and then you saw this droop in the RSI too as well. Same with the SPX. We've been calling this out, BP SPX. It's just been trending down while the market's been going up. We're like, this move isn't being supportive. Obviously, more volatility is going to come. And, but despite all the comments saying that the market only goes up and stocks only go up, doesn't mean that you can't be ready for when the market pulls back, which, by the way, I was ready today. Most people were who watch this and actually pay attention. NYSE high low, jammed up to the max, still hasn't even started turning around, 97.75. Hey, maybe the NYSE might start rolling over if we start seeing this roll over too as well. But as I see it right now, it's just a bullish level extreme. Breath died off today, obviously. Minus 28.20, so not the greatest, but it's also not at an extreme level either. All right, Keep moving on. The bulls and bears survey, nothing really going on here quite yet, but you can call the negative divergence in both these extreme levels here on the surveys of sentiment. So when things are very extremely bullish, it's time to maybe pump the brakes a little bit and start looking for the bearish side of things. And, what's the asset managers doing? What's the RIDEX doing? You can see a big downtick going into the new year, which means that basically what this tells me is they were long exposed here, maxed exposed to the long side, and some were even leveraged up, right? This is just extreme bullish levels here. And then all of a sudden we see this big pullback here, still really bullish overall, but just notice the fast move to the downside. This is very similar to what happened in 2020. All right, a couple of other indicators that we went over in the Michael Guyad interview. If you haven't watched that, I'd highly recommend it. His rate of change on the 13-week lumber to gold ratio, still risk on, okay? We saw even an uptick today, so the move is still risk on right now. However, on the 3-week, which was the more active, where you can be wrong more, we called out that it was negative last week on Friday and said now it's a risk-off play. And you can see today, we crossed down through this on Friday, and today we saw some pickup of volatility. So it happened to be right, but it doesn't mean that it's long-term right, because all of these dips could get bought, and this could head right back up back to risk-on territory, which means it's, full equities. Then the XLU over the SPY, this is his beta rotation strategy, 4-week rate of change, didn't quite get above there to go risk off, so we're still on a risk on environment. Once it crosses above zero, into positive territory, that's when you move to a risk off environment the following week, and we're not there yet. All right, commodities. Commodities were a big player today. Gold, look at gold's breakout. This was a huge day for gold, up almost 3%, 51.50. Holy moly. Broke out of this, you could call it that neckline for this left shoulder, this inverse head and shoulder, and we just really started screaming up higher. Very bullish day for gold. We might have some resistance around 1960, but if we can get through those levels, there's no reason that we can't go test the all-time high again with gold. Silver also, look at up 3.6%, a big day. I moved up the resistance to now 28.80. If this move also continues, it's looking very strong, very good breakout for the precious metals and even mining stocks. Then let's take a look at oil. Look, we marked out 50 as resistance. It's still banging its head up against 50, so let's keep a close eye on that. The CRB, which is widely tracked by the Fed, hedge funds, institutions, yada, yada. We're still above the 5 EMA. We gapped above the area of resistance. However, we closed just slightly below it today at 167.35. So we got to see, it's basically just sitting on there. So if we start to continue to push higher through this, that's going to be very bullish for these commodities. And in order for the commodities to go higher, well, we need to see the dollar continue to move lower because they work in inverse. Now, the dollar on the weekly time frame doesn't look all too bad. I mean, yeah, it's been in this huge downtrend, but we're extended past the lower Bollinger Bands. We're in this kind of area of support. We have positive divergences both on the RSI and the MACD. Hey, this could very well pop up here, but we don't know how high, it can pop. So we got to just track it here on the daily time frame. We have the 200 sloping down, 50 sloping down, 20 period sloping down. The only thing that's positive about this is the positive divergence in the RSI, positive divergence in the MACD, and the kind of, we broke out of this falling wedge, which is bullish, but notice how we broke about, and then we just been kind of drifting down. This reminds me of the VIX. We broke up and we saw this spike up, and then we started drifting down, and, we haven't caught a bid here really yet, but today's candle, the bulls did step in right down here at around 89.50. Where was the low? 89.39, which is just a very bearish day, and then they started stepping up. So look to get above the high. So if we start getting above 89.95, let's call it, then maybe we can squeeze up right here to the 20 period moving average, which is at 90.35, and then we could test to see if we can get above that. But we need to see it break that level, in order for the dollar to continue this move, not to continue the move, to try to make the move higher. Let's look at bonds and yields very quickly. What do you know? We've been trending down, but now we're starting to hold these higher lows. Okay, we're holding the higher lows. If we start breaking below that, okay, then, that's not the greatest sign. We'll keep an eye on it. And then we also need to see it break above this resistance. Notice how we came up today and the other day, and we're pretty much tapping on this wall right here. So we're either going to have to break above or we're going to break below. But I feel like either way we move, it's going to be somewhat of a strong move. And then also notice the RSI. The RSI has been going higher lows all the way through here. We're at 49, 48 on the RSI. If we start ticking above 50, this is going to show some strength here. That could be potentially a bottoming pattern taking place right here where we start breaking above, which would tell me if more people are moving into bonds, some people could be moving out of equities, which means it's a risk-off environment. If you look at yields, yields have been doing nothing really, just been going sideways now for a few days, weeks, I guess you can say. But we're still holding the higher lows. We're very close to breaking down through this because we've been struggling for the 10-year to get above 1.0. And then you have the 30-year at 1.66, still holding higher lows, but we're kind of just getting jammed up a little bit here. So what's going to happen? Are we going to break to the upside and squeeze past a 1.0, or we're going to break down to the downside? I don't have that answer, so we're just going to have to play it day by day. Let's talk about the conclusion. Let's wrap it all up because, man, I talked about a lot today on this big red day. Okay, so what am I looking overall? First off, I have been positioned long into certain minor stocks, and I post them on Twitter. I typically just post them on Twitter, but I'll start this year. I'm going to be posting more stuff on Instagram, even TikTok, and then also Twitter as well, okay? I'm positioned in minors. I'm more on the risk-off play right now just because of the 3-week rate of change on the utilities and stuff. Not the utilities, the lumber to gold ratio on the 3-week rate of change. And I've been paying close attention to seasonality, okay? Seasonality for January and February, I don't feel like I want to be a part of that. I might be looking for long positions here at the low portion of January, mid-January, and seeing if I can catch a rise up. But I'm just very hesitant at these specific levels in these overextensions. So going in for long positions, what am I looking for? I'm looking for monthly reconnects of the 5 EMA. Once I start seeing those levels, or even just a fast overextension move to the downside into a support, I will be buying individual stocks long at those levels. I'll be talking about those individual stocks as they come up, as they arrive. I'll be posting them on Twitter. I'll be posting them on Instagram. I'll be posting them everywhere I can, just so you can kind of get an idea as to where my head is at, where my mind is at. But until then, I got to see what plays off of this big selling day, which was not that big, to be honest. We're still above the 20-period moving average. I'm not scared about it. Some people might be losing their minds, but as I see it right now, there's still the possibility of way more volatility to come than what we saw today. So I'm just playing it very carefully. Protecting capital, that's the name of the game, okay? I ain't trying to win big. I'm just trying to protect my capital and grow it decently throughout the course of my life, okay? I ain't trying to get rich overnight, because chances are if you're trying to get rich overnight, you're going to go poor overnight too. Oh, shoot! All right, everybody, that's all I got for you on today's first of the year daily stock brief. Talk to you later.